Assalamualaikum warahmatullahi wabarakatuh, and a very good evening to our beloved lecturer Sir Muhammad Faizal bin Kamarudin, and to all our viewers. Our group will be presenting about consumer credit and insurance planning. Please enjoy the video. Thank you.
Okay, let's move forward. So we continue to summary for this our discussion for focusing on consumer credit and insurance planning. Okay, as we know, we have six components for financial planning, for individual financial planning. The first is cash flow, second is risk management, number third is investment planning, number four is retirement planning, number five is tax or zakat planning, and the last, number six, is estate planning. For our discussion today, we will focusing on consumer credit, which is under cash flow, and then second for insurance planning is under risk management. Insurance planning is summary is how the individual manage the risk should once become disabled or medically unable to perform the current work obligation or pass away early in life are also part of financial planning. Young family need to understand the risk and various options to prevent financial disaster for the remaining spouse and their children. Okay, for consumer credit, which is having a history or repaying debt on time allow us to build a good credit history, and in return will allow the individual to borrow more money at better term. Access to various types of credit allow consumer to extend their purchasing power and take advantage of consumer credit protection. Understanding how consumer credit work can help the individual manage their own credit wisely. Hi, Assalamualaikum. I will continue for another chapter is for consumer credit and insurance planning. This one I will explain about the background for consumer credit and insurance planning. By the way, my name is Zawawi bin Ahmad. Okay, let we discuss. Okay, what is a consumer credit? Consumer credit is a money that consumer have borrowed from the bank, and then in another from bank is financial institution or other business to make purchase. This organization allow consumer to repay their outstanding balance over time in exchange for interest payment. The type of credit is personal loan, credit card, some sort like student loan, mortgage loan, hire purchase loan, and also business loan. For business loan is for expand their business. Consumer credit is money that consumer can borrow to pay for good or services. Access to the credit allow consumer to make purchase today and then pay the installment over the period. The flexibility of payment maybe it can be long-term payment or certain period of time, which agree to consumer and the bank lah. This credit product provide consumer the flexibility to pay for purchase over time, typically with monthly payment that are significantly smaller than the purchase price. In exchange, consumer pay interest to the lender. Okay, next is insurance planning. Type of insurance, we have life insurance, medical insurance, and also investment linked insurance. Participating in insurance will enjoy, the individual will enjoy the benefit beyond risk management. In addition to the protection for some possibility of loss of income due to death of the breadwinner of the family, buying for insurance plan will give another benefit to the participant because it will serve of plan as mean of such as medical card plan, education plan, and investment link plan. Premium for insurance, for premium payment will be can can make to the insurance company via monthly payment, quarterly, half yearly, and yearly payment. Insurance is an important part of financial planning because it's its main character to protect income, and they also include costs associated with accident, disability, critical illness, and death. When the individual choosing an insurance plan to sign up, the individual must consider the amount to be protect, family and economic situation, or do buy a suitable plan. The type of insurance should consider during financial planning include individual plan for the deaths and cover total permanent disability, critical illness, accident, and medical card for costs at hospital during the treatment or hospitalization. Accident and illness that put a situation out of work which can't be predicted. We should have this disability insurance that cover at least 2/3 of the income to be in the safe place it become unable to work.
Assalamualaikum warahmatullahi wabarakatuh. My name is Hazwan Marwan bin Mustafa and I will be presenting about the importance of consumer credit and insurance planning. And the first one is consumer credit. Consumer credit is known to be a personal debt taken on to buy goods and services. A credit card is one of the popular options of the consumer credit. Even though all type of personal loan is considered as consumer credit, but the term is commonly used to describe an unsecured debt that is taken on to buy daily basis of goods and services. Nevertheless, consumer debt can also be considered as consumer loans. For example, like student loans and auto loans. Why consumer credit is important to us? When end user and business can loan money, the economic transaction would flow efficiently and the economy can improve. For example, the credit empowers companies to access for tools that they need to manufacture the goods that we need to buy. A business that not be able to borrow or loan money, they will not be able to buy the basic materials that needs for them to produce the goods for them to make a sale, such as a machinery or any basic materials or even to pay out the workers. Consumer credit makes it attainable for end users to purchase things that they need, especially things that are high cost, which is motorcycle, car, and especially houses that is high cost that will need to be paid all at once. Therefore, the existence of credit makes it manageable for end users to pay out over time while purchasing the others necessary products and services. Consumer credit also allows consumers to acquire an advance on income to purchase product or services. In an emergency like a car breakdown, it will be a lifesaver. Because credit card is relatively safe to hold, many people in Malaysia is increasingly becoming a cashless society, during which people routinely believe credit card can be purchased large or a little things. The next one is about insurance planning. Insurance planning is to secure ourselves our family, our loved ones, our home, our assets, our business to against an unexpected events. The idea of behind insurance is to financially or a fund specially designed to assist individual to recover in case of unexpected loss. In this way, insurance eases financial burdens that can occur when the disaster strikes. Of course, all people in the world wish to have a financial freedom in our life. Therefore, saving alone are not enough to achieve a financial freedom. We need to take our insurance policies, which is important to insure all our assets. Why insurance planning are important? We take an example where we already save all our assets, all our savings, all our money. When there are one situation where our car damage, then we have to repair all the damage of the car because we need to use the car. So if we have an insurance, all the insurance will be covered for the repair of the damaged car for when our car is in accident, or when we are sick, when we need to pay our medical bills. And last but not least is buying insurance is vital because it ensures ourselves positively are financially secure to face any sort of problem in life. A general insurance firms offers insurance policies to secure health, travel, automobile, and home. And the most convenient part of it is that you can absolutely can buy all these insurance policies through online nowadays. Thank you. Assalamualaikum.
Assalamualaikum warahmatullahi wabarakatuh. My name is Masyana Izli bin Minhat. Today I'm going to present purpose of consumer credit and insurance planning and current issue in consumer credit and insurance planning. We go through first purpose of consumer credit. Purpose we study consumer credit is we want to understand deeply what is consumer credit is about and advantage and disadvantage of consumer credit. Consumer credit will affect amount of one's personal spending on goods and services. Okay, item example as such as food purchase and house cleaning services, which food purchase we can consider as necessity purchase, while house cleaning services is discretionary purchase. Consumer credit also is one of tool or instrument used by economists to measure economic growth or contraction, since consumer credit is considered as important indicator for the economies. When consumer spending and willing to borrow and able to repay their debt, mean economy is in growth. But if the consumer cut the spending because of concern the personal financial stability, the economy will contract. Usage of consumer credit allow person to enjoy advance income in credit to buy necessities or make payment during emergency. Example like when we have a car breakdown or others. Okay. Next, we move to purchase of insurance. Purpose of insurance planning. Okay, insurance is a form of contract. As we know, is a form of contract that represent by policy, which an individual can get financial protection and reimbursement against losses. So this insurance, purpose of insurance can we consider as hedge against the risk of financial loss that may be occur to the insurer self, their property, liability, or from damage or liability or injury caused by to the third party. So most common insurance in Malaysia are life insurance, health insurance, health insurance such as emergency cover for hospitalization, treatment and recovery. Property insurance, we have vehicle insurance and home insurance, and protection insurance such as personal accident insurance. Insurance can act as our financial shield against risk. Example, if fall down at the stair and injure our back, so we need personal accident or medical insurance to help to pay for our medical bills. And then example, if we involved in a car accident, we need financial insurance, financial assistance from our insurance provider to pay damage to our car or to third party's car. Issues in consumer credit. Current issue in consumer credit, as we know, Bank Negara Malaysia now working to enact Consumer Credit Act 2022. This also involve to strengthen the rule and regulation for all activities, including buy now pay later scheme. Okay, this enactment of this act will be a collaboration between Ministry of Finance and Bank Negara Malaysia. So, according to Bank Negara Malaysia Governor Dr. Nur Syamsiah Muhammad Yunus, buy now pay later scheme is on the rise, and there is a legitimate concern that the scheme may encourage consumer to spend beyond limits, and most of buy now pay later scheme in Malaysia are offered by non-banks institution. So the creation of Consumer Credit Act, which announced in Budget 2021, aim to provide a regulatory framework for the issuance of consumer credit, while also strengthening oversight of non-bank credit provider. FOMCA applied consumer credit to strengthen consumer protection in the financial sector. FOMCA also hope that Bank Negara Malaysia will enforce in joint with Malaysia Security Commission. And then current issue in insurance planning. Recently, flood disaster hit across our country and affected Shah Alam and close by area, and exposed that around 95% of Malaysian vehicle owner are not covered by insurance, because Malaysia not opt for insurance in their flood cover in their insurance premium. So Utusan Malaysia estimate there's around 50,000 car involved the flood across the country, while maximum cost of repair can up to 20,000 ringgit for each car. FOMCA also urged insurance company to consider offering 50% rebate on vehicle repair costs to vehicle affected in the flood. And then we also heard the news that General Insurance Association Malaysia, PIAM, and Malaysia Takeover Association advised vehicle owner that affected with recent flood to contact insurance provider to get further advice and planning to make a claims and to check their policies. Okay, that's all from me. Thank you.
Assalamualaikum, my name is Afiq. Today we present for the assignment FIN533. Based on sample of 4.2 million individual, RAM Credit Information Sdn Bhd has computed 2019 credit score profile, which indicate 69% of local have good credit score, up from last year. However, the nation financial literacy rate is low. Credit Counselling and Debt Management Agency data indicate that the national financial literacy rate in 2019 ranked 26 among 30 participating nations in the Organisation for Economic Cooperation and Development report. 80% of locals prefer using website to learn about financial education over social media and newspaper. Based on the 2019 survey shared by the company, about 11% of all consumers check their credit report every month, while 44% to do so 6 times a year. Statistical information of insurance planning. In the first half of 2021, the overall profit of insurance fund and takaful decreased compared to the same period in 2020. For life insurance funds and family takaful, excess income over expenditure decreased to 3.7 billion. First quarter to 2020 is only 4.7 billion. Premium growth, 11 new business recovered strongly at 30.2% in quarter 1 to 2020, negative 7.1%. The investment related business category, guarantee reduced mortgage team takaful, reducing team term insurance takaful, MRTA, MRTT, and medicine and healthcare are the key drivers. Any related information of consumer credit. Bank Negara Malaysia is working on the adoption of the Consumer Credit Act in 2022 with the aim of strengthening the regulatory system for all consumer credit activities, including providers of deferred payment program. Central Bank of Malaysia Governor Datuk Noh Syamsiah Muhammad Yunus said the Central Bank would pass the bill in collaboration with the Ministry of Finance and the Securities Commission SC. BNM is working with relevant authorities to monitor development and educate the general public about BNPL program, but said the proportion of the household loans and programs remains low. These programs are increasing not only in Malaysia but also in other countries, and such programs may allow consumers to spend beyond their own means and may not be able to repay high debt. The Malaysian BNPL program is offered by non-banks. Any related information of insurance planning. Life insurance not only provides security for you and your loved one, but it can also be an integral part of a sound financial plan. As you grow and live your life, you can understand its many benefits. Financial planning is the process of achieving your life goal by properly managing your finance. This includes element of protection, wealth accumulation, emergency planning, and planning at specific stage of life. The following are 4 common areas in which life insurance can play an integral part of your financial plan. 1 is paying off a mortgage, 2 a lump sum of cash for final expenses, 3 funding for college, 4 is caring for a special needs child or aging parents.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Albani binti Marhat. My student ID is 2015-123-043. I will continue with the conclusion. For the conclusion, the economics of consumer credit have remained the same, even if the mechanics of the process have not. People borrow when they believe the resulting changes in composition and timing of their purchases will be worth the cost of the changes. Institutional innovation has involved attempts to reduce these costs, but sometimes borrowers make mistakes in planning, and governmental regulation has arisen to prevent such mistakes through limiting credit use. At the same time, consumer credit in industrialized countries have grown rapidly as more and more people earn regular income in the form of fixed wages and salaries, and as mass market for durable consumer goods have become established. The insurance industry currently raises awareness, assigns an economic value to risk, advocates for climate change action, and takes measures to reduce physical risk through mitigation. As well, the industry has proven to be a critical influencer to encourage risk-averse behavior and regulation. Those interested in modifying the overall industry should consider the influence of the reinsurance companies specifically because they are an important lever to influence the pricing and behavior of said insurance. Though the scale of the reinsurance sector itself is large, it is actually dominated by relatively few major companies and geographies. Today, regardless of any concern over growth trends, most informed observers agreed that consumer credit availability in the modern economy provides a number of important economic benefits. For example, credit cards provide a convenience to consumers, acting as both a method of payment, a flexible credit instrument. We may expect then that most consumers would pay a modest net monetary cost to access this convenience. But the wide distribution of costs and benefit across cardholder instead suggests extensive excessive variation in the credit card market, with some consumers paying relatively high net costs and others receiving substantial net monetary benefits. Our recommendation are that most consumers do not hold a credit card that is particularly well suited to their use pattern, mostly are consistent with consumers exhibiting certain behavioral bias when they first choose their credit card. In particular, we find suggestive evidence of optimism bias that cardholders systematically underestimate their probability of incurring credit card interest charges. This would help to explain why the majority of consumers who regularly pay interest hold a card with relatively high interest rate, which increase costs for these individuals. In addition, we find some evidence that a small but substantial shares of cardholders overestimate the net monetary value of their card. Next is insurance planning. Our recommendation on insurance planning is disaster risk reduction service. Insurance alone will fail to reduce risk unless it is implemented along with mitigation measures. Providing mitigation solutions to reduce risk is essential to the protection motivation theory to change behavior. Second, through the service already exists, the demand from consumer is relatively low. This may be in part due to a perception that governments are not individuals and corporations are responsible for reducing risk. The insurance industry should increase their risk management service to clients to offer solutions and motivate risk-resilient behavior. Insurance and reinsurance companies benefit from this service by selling additional expertise and making high-risk areas more insurable. In order to increase demand for disaster risk reduction services, the industry should educate consumers of the benefit of taking such effort or make reduction measures for insurance coverage. These recommendations apply to the broad insurance industry, including both insurance and reinsurance. The reinsurance sector is also regulated less than primary insurance companies, generally not beyond the risk of default of insolvency.